Good morning. I am Malik. Let's look at the data from yesterday, Wednesday, January 28th. The KSE 100 index closed at 188,380, gaining about 177 points. But the number that stands out to me is the intraday high, 189,183. The market tested the 189,000 level and pulled back. With a total traded volume of 953 million shares, we are seeing significant activity, but the index itself is decelerating. Today, Thursday, January 29th, is a pivotal day for one specific reason: settlement mechanics. In our T+2 system, a sale executed today settles on Monday, February 2nd. Why is Monday important? It is the first trading day after the Saudi Stock Exchange opens its doors to international retail investors this coming Sunday. For investors who are planning to reallocate capital or simply want liquidity available to react to Monday's new landscape, today is the effective deadline to raise that cash. If you sell tomorrow, Friday, your funds won't be available until Tuesday. This creates a natural pressure point in the market that every trader should be aware of. When we look under the hood of yesterday's close, the market is telling two different stories. Story 1, the banking pause. Mizan Bank, MEBL, closed slightly down at $483.19. MCB Bank was essentially flat at $417.28. Given that we are approaching a major regional liquidity event, this stagnation could be interpreted as institutional caution. Large funds often lighten their heavy positions, like banks, ahead of uncertain weekends. If you are holding banking stocks, it might be worth asking, is the upside potential for the next 2 days greater than the settlement risk? Story 2, the energy strength. On the flip side, the energy sector continues to attract flow. ATOC Refinery, ATRL, gained ground, closing at $886.76. National Refinery, NRL, moved up to $445.25. Why the difference? The macro backdrop, specifically the geopolitical tension involving the Malacca Strait and oil prices, naturally favors companies with inventory and dollar-hedged earnings. While banks seem to be taking a breather, energy is acting as the market's defensive shield. We also noticed continued weakness in the technology sector. Systems Limited, SYS, drifted down to $160.01. TRG Pakistan closed lower at $72.26. In a high-inflation, high-oil price environment, tech stocks historically struggle because investors fear interest rates will remain higher for longer. The data supports this trend right now. A note on volume leaders. We saw massive volume in World Called Telecom, WTL, yet the price slipped to $1.71. High volume with negative price action is often a signal that supply is overwhelming demand. For those active in these high-volume penny stocks, caution is usually the best strategy when the broader market faces resistance. What should be on your radar for today? We have a very busy board meeting calendar. 1. Pakistan Oilfields Limited, POL, meeting today at 11 a.m. Context: POL is a dividend heavyweight. With oil prices elevated, the market will be watching their payout announcement closely. A strong dividend could inject confidence back into the E&P sector. 2. The sugar sector cluster. A wave of meetings is scheduled today. JWD Sugar, Chashma Sugar, Mirport Sugar, and Diwan Sugar. However, remember that many of these are in or near book closure. JWD Sugar, for example, has a book closure related to its massive dividend. Trading in stocks during or near these days can be illiquid. Ensure you check the specific dates in the daily quotations file before entering any orders. 3. Other notables. Atlas Honda, ATHL, meets at 10 a.m. Exide Pakistan meets at 3 p.m. These earnings will give us a clue about the health of the auto and industrial sectors. So how do you navigate Thursday? The market is at an inflection point. We are testing all-time highs at 189,000, but we also have a major geopolitical shift happening on Sunday with the Saudi market. Here are a few things to consider for your strategy. Liquidity. If having cash ready for Monday morning is important to you, today is your window to act. Defensive positioning. Energy stocks like OGDC and ATRL have shown they can perform even when the index is choppy. They might offer a safer harbor than volatile tech stocks right now. Risk management. With the index struggling to break resistance, tightening your stop losses, especially in stocks that have rallied hard, is a prudent move. The market provides the data. You provide the discipline. Watch the 189,200 level. If we break it with volume, the bull run continues. If we reject it again, we might see some pre-weekend profit taking. I'm Malik. Trade safe and good luck. Disclaimer: StockSense is an educational platform. I am an analyst, not a financial advisor. The strategies discussed here are based on data and market speculation. The stock market is a high-risk environment. Do not trade money you cannot afford to lose. Do your own research.